Sun Limited fabricated the special equipments which is a solar power plant panel. Okay, so there is one product, solar power panel, which is an equipment as per the drawing and design by the customer. However, due to the liquidity crunch, the customer requested the company to postpone the delivery schedule and requested to withhold the delivery of the finished good product and discontinue the production of the balance items. Sounds like revenue recognition, asset with no alternative use. Okay, so customer told not to give, he must have paid some advance. Similar, no? Some story. Now, as a result of the above, the details of the customer balance and the goods held by the company as work in progress and FG as below. So, there was some WIP which is 85 lakhs and already certain finished goods were done which is 55 lakhs, but you are not yet delivered. Now, is this over a period of time or at a point in time? Over a period of time. How do you know? No, because I know, because I can see there is one debtor here, 65 lakhs. If it was not over a period of time, at a point in time, I cannot recognize any revenue, no. So it would have been my work in progress only. When I see that there one customer billing has happened, that means it must be over a period of time. So I must have used some input method or output method now. Which condition among how many? How many conditions are there to decide whether over a period of time or not? 3 conditions. Now, should all the 3 fulfill? Any one should fulfill. Any one should fulfill. Now, which one got fulfilled here? God knows. Not interested. I am just told you. It is not related to 115. Just to remind you. 115. Okay, is there? Nice standard. Now, the problem happened. Petition for the winding up against the customer filed. Is 109 applicable? Ind AS 109 applicable here. Debtor is there means 109 comes into picture, no. Now, he has filed petition for winding up. So, what is going to come? ECL, expected credit loss. Lifetime or 12 months? Which assessment you are going to do? Lifetime ECL or 12 months ECL? Lifetime, because the moment you recognize customer, always you do 12 months ECL. But if there are certain circumstances which gives an indication that the customer is not going to pay you, which winding up is a very clear indication, then probably you may have to do a lifetime ECL. Now the comment with the explanation on the provision to be made for 205 lakhs included in the sundry debtor, FG and WIP, should you make the provision or not? Or in the new scheme, they said advise on the provision to be made for 205 lakhs on sundry debtor, finished goods and work in progress. Thus both the answers are same, both the questions are same. What is the, no, again at this, see, till now even if this question came in the examination with the word comment only, but that difference I told you, no, even examination questions full 100% you don't trust, 95% only to understand these verbs. But tell me students, what is the difference between this comment and advice? What has gone wrong? Provision is or should be made? Provision of a, what is 205? It's the total amount of all this value, no? Now should you make write off and make it 0? As of now, these 3 items are appearing in your balance sheet. Should you keep it in the balance sheet or should you not keep in the balance sheet? Comment means what my client must have done. It was at 000 or you would have kept it. You would have kept it reasonably. Or he may not have kept it. He must have written it off. Possible. No, see, ultimately when true and fair, it should be both the ways. It should neither should be an overstatement nor should be understatement. There can be 2 possibilities that client has made no provision or client has made a provision. What is your comment if he has made no provision? Or what is your comment if he has made a provision? Versus advice. What is the difference between, what do you mean by advice? See, when the advice verb is being used, the advice verb is being used when there are alternatives. So confusion comes because of the alternative, no? Is there any alternative? That means if I want, I can make a provision. If I want, I don't want to make a provision. Then why did they say advice? Or what should I do here? Huh? Amount of provision, no. See, you don't tell me 50, 20% and all, because that's not the question. Is should I yes or no? Provision should be made for 205. That's what they asked. Should you make the provision for 205 or should you not make the provision for 205? Or should you make the provision only for some portion, not for some other portion? Which one? Huh? Sorry? Work in progress, I should make a provision. Okay, what is this now? 85 and 55, cost or NRV? That no, details of the customer and goods held. That means this must be my book value. And this must have been already validated cost or NRV, whichever is low. Or NRV, we don't know, since it is over a period of time. It might have been possible that the one of the condition that asset is created with no alternative use to the entity. Maybe that must have got activated and it has become over a period of time. And if it doesn't have any alternative use to the entity, do you have an NRV? If you don't have NRV, then what is your NRV? 0. What is your cost? Cost. Should you make provision for full? Understood, no? Catch, issues, verbs, how to use that. So here you have to talk about alternative treatments. Ind AS 2. Ind AS 2 and Ind AS 109. For this we will apply 109. Expected credit loss. These two we will, since they say WIP and FG, I say Ind AS 2. But when you talk about, then they use the word called advice, comment. You have to talk about the possibilities, because the question is very silent. You have to make certain assumptions. Ind AS 37 is what? Provision. Where? What provision? See, Baba, that provision, when they start and they may say make necessary provision as per applicable Ind AS standard, that also they may fool you there. See, when you talk about the provision, it is for some expenses incurred, liability sitting on your head because of past event. Did you incur any expense here? Did you do any action because of which one liability is hovering on your head here? No. So Ind AS 37, where it comes into picture? You have manufactured some product. Work in progress is in your hand. Customer is selling, I don't want that material. So why provision is going to come? You sold him and told, I will give you a warranty. Which warranty? You sold some and you said I will give you warranty. Which warranty is governed by Ind AS 37 and which warranty is governed by Ind AS 115? Service warranty, and this 37 is assurance warranty. Extended warranty is service warranty. Clear? Clear, no? So there are two types of warranty called assurance warranty and service warranty. If it is a service warranty, it is an additional warranty, which is governed by Ind AS 115, which says it's a separate performance obligation. So deduct it. If it is a manufacturer's warranty called assurance warranty, then make a provision as per Ind AS 37. Then at 37 gets attracted because you have got sold with certain promises. But here 37 is not applicable. Are you clear? Okay, let us see how to see. Since they use the word advice, there must be alternative and you have to make an assumptions here. Alternative assumption. So how do you recognize? First of all, is it my inventory? Yes. Why? Because see, first of all, is that WIP and FGC of inventory? Yes. Because inventory includes which is held for sale, production or whatever. The solar panel is your inventory. How should I measure my inventory? At a lower of cost, NRV, whichever is less. And customer has postponed. That means its entire cost incurred for solar power pan has been shown as inventory. The customer has postponed the delivery schedule due to liquidity crunch. Now, what is the alternative? Alternative number 1. The solar power panels are in the possession of the company only, because customer told no, don't deliver it now. If it was handed over to the customer and if the customer was in thing, you would have recognized it as a revenue. Ind AS 2 is not applicable to you only. Then you have to see, is there any sale with the right to return? That you should have activated. Not there. Now, since it is in your possession, first thing, if you can sell it in the market, that means you can realize it's NRV. If it is an alternative use was there, then you can do it. In the absence of NRV and WIP and FG, assuming that the cost is lower, company can value the inventory at 140 lakhs. That means write-off of inventory not required. If it is alternative use are there, then how it is becoming my inventory? Maybe over a period of time, maybe some other two conditions must have got fulfilled. God knows. If it has got an alternative use, maybe some other two conditions of 115 must have fulfilled. That's why it is over a period of time. That of anyone, no. So, what if you cannot sell it solar power? Really, if it has not alternative, that means your NRV is nil. So, if the NRV is nil, full value of the FG has to be written off in the books. Like I told you that soup, dragon tiger soup. No NRV, nobody want to take that. What you will do? You throw it to the gutter. No, cost is lost to you. Book it. Understood? Now that's the advice. So you have to advise that, okay, look, if NRV is available, do it. Not there, do it. Comment. That means they must have, see, we don't know here what must have happened. It can be in a permutation combination there. What the client has done and what I'm supposed to advise. What about the provision for bad debts? Yes, sundry debtors balance, since they have filed up for the petition, it is very sure that you are not going to recover. So there is no doubt with regard to write-off of 65 lakhs. And if the client is claiming that I will not write off, no, this is wrong. And what is my advice? You have to write off this, but write-off of the inventory depends upon the availability of NRV. Are you clear now? Advice. So your advice is, see, sure shot you have to write off this. But writing off these two depends upon whether you can sell or no. If you can sell, then cost or NRV, whichever is low. If you cannot sell, then write off. Are you very clear in your advice to anyone? Things are very clear to you. Now this question came in the examination. What do you think, students? Twist or as it is? 0. If NRV is 0, that's why you have to write it off. Now when this question comes in the examination, what do you think? See, twist or as it is? As it is, because see, answer somewhere where it was hiding. Okay, it's a test your knowledge 2 question, so much theory they have written. And this is what I have organized. I don't know how they have. If you open the study material, then you understand their format. Now my format looks pleasing, easy to understand. Now when it came in the examination, yes, same thing came, only difference is solar panel converted into inverter plan. Rest every story is same here. Customer reduced 255 lakhs turned into 615 lakhs. Comment with the explanation. So you will write the same story. So alternatively with an inventory, if you can sell, then you will measure at the value. If you cannot sell, you will write off. And any one alternative can be written in the exam. Provision for debtors could have been, you have to make. You write both the things. Okay. So they have told somewhere anyone can write, but advice, comment, they are simply confusing you. So you write just both the right, your opinion. Are you clear about this? Next question. On 31st March 2011, inventory of ABC includes spare parts which had been supplying to a number of different customers for the year. Some spares are there. The cost is 10 million based on the retail prices. What is this? Retail method, non-historical cost. Retail minus margin. The expected selling price of the spare part is 12. That means 2 must be your margin. On 15th of April, due to market fluctuation, expected selling price of the spare parts in stock reduced to 8 million. The estimated selling expenses would be 0.5 million. Okay, this is when 15. On 31st, you already valued this stock at 10. Now the further the stock prices, market prices fell down. The financial statements were authorized on 20th April. Is it a subsequent event? Yes, because there was change in the estimated price. Again, 100 and in Ind AS 10 we will discuss. Condition means there is an uncertainty about the selling price. Now, did you sell this on 31st March? When you are going to sell? Then you estimated that you may sell at 12. In that estimation, is there a certainty or uncertainty? Uncertainty. So we will assume that way. So there is an uncertainty. It's not that it should have got damaged only. That's what they use the word called NRV, means estimated selling price. Estimate happens when, Baba? Tomorrow, no? It's subsequent event. Because see, the point is when the definition of NRV uses estimated selling price. Estimated means at least tomorrow's price, not right now. On 31st March of the year, there might be one price right now. No, I'm not going to consider that. I'm estimating at what price I may sell it. Why? Because inventory is available in my hand right now. Having inventory in my hand itself is an uncertainty for me. Now, board of directors also not approved it. So now within that day only these changes happen. Yes, if these changes would have happened after board of directors would have approved it. Nothing doing. Now at 31st March 2000, okay, are you going to write off? Yes, how much? 2.5. So this has come in your MTP also, RTP also. Now 31st March 2012, at the end of second year, direct that inventory whatever you have written it off to 7.5 is still lying in the warehouse, and they believe that there is a saleable condition and active market would result in immediate sale. Since now it is improved, estimated selling price is 11 and selling expenses are 0.5. So at what value you value here? 7.5. Are you going to reverse? Yes. To what extent? To 10. That means 2.5. You will not value more than 10 here. Reversal will happen only because 10.5 is the new NRV. But you will reverse only cost minus what charging you have done. So it is a theory question. So first of all, you will explain here inventory as per Ind AS 10. You can provide additional evidence which is considered as an adjusting event. Now inventory value will be 2.5. We discussed already why it is, because cost minus NRV, and subsequently new assessment has to happen. So we see that revised price is 10.5, but however we can reverse only to the extent of 2.5, so that I will bring it up to its cost. Same principles I will follow in Ind AS 16 also. Now what is the major difference between Ind AS 2 and AS 2? Low probability, because this question has come in the recent RTP, MTP, but not there in your study material. Just for our understanding, machinery spares. Now in AS 2 explains that inventories that do not include spare parts, servicing equipment and standby equipment which meets the definition of PP. What is this spare part? Like it's the big item. You have just kept to replace if the machinery breaks. Like suppose you have got one cycle. Okay, cycle's tire can get damaged. So one new cycle tire you have purchased and kept it ready. The day cycle tire will go for a toss, you will not do the repair and all. Just throw that cycle tire and use this new cycle tire. Is that cycle tire is an inventory for you? Question is clear? Like a mouse. I purchased one new mouse. Okay. So there is one extra mouse also here. Can you see? Is this inventory? What it is then? This is accounting standard says if you have got an extra mouse which you can use with the computer, it is your PP. An account as per Ind AS 10, not as per your Ind AS 2. However, Ind AS 2 does not contain specific explanations or in respect of such spare. This is covered under Ind AS 16. So Ind AS 16 directly speaks about this. Ind AS 2 doesn't speak, but in AS 2 speaks about, telling that this is addressed there. Subsequent assessment of the NRV. Okay. Ind AS 2 provides detailed guidance for subsequent NRV. Now we have discussed. It also deals with the reversal of the write down, recognition, disclosure, etc. like what we have just now discussed. AS 2 is very silent about it. And the cost formula, AS 2 specifically provides formula used determining the cost of an item which should reflect the fairest possible explanation of giving present location and condition, but Ind AS 2 do not specifically state so and requires use of consistent cost formulas having similar nature. Okay, calculation of the cost formula or whatever. Again, you can give low priority because it was a part of MTP. Again, this is also a part of an MTP question, but nice question for your understanding. And you have to tell me this. Defense Limited is a public sector undertaking engaged in the construction of ships. XYZ Private Limited approached this Defense Limited for constructing one ship which will be used by XYZ Limited for transportation of some specific goods. Understood the business here? Now the offer was accepted by the defense innovators and both the companies entered into an agreement for the construction and delivery of 3 specifically designed ships. Maybe that ship is such a way that the moment it sinks, it will act like a submarine. Maybe nobody can manufacture, they are the specialty people. So they say, give me this type of switch which can act both like a ship also, submarine also. Okay, whatever it is. On what basis? Fixed price basis with a variable component to reflect certain items. Now mind is revolving around 115. Now suddenly base and depot spares of all the ships shall be procured by the Defense Innovator Limited. Somebody who have done the audit of this shipbuilding company will understand this terminology immediately. Now who, including me, what we know, because this terminology they have started to use now. Oil and gas related one question they ask, they will ask that terminology. Okay, this public private partnership in that, then XYZ, joint operators, that's okay. Clinical trial, they will use in one intangible asset. So first thing our job is, see students, whenever we are not understood this, please go and type in Google and understand what it is. Clinical trial, a simple word, they will use in your question. But you should know what do you mean by clinical trial, so that you can answer the questions very clearly. Now base and depot means some base spares, whatever you need, it is acquired by the defense and it will be paid on cost of the item with certain percentage. Like this is my, like mouse is a very base spare, it's a basic thing. So who will purchase? The manufacturer only will purchase, assemble it and give the finished product to you, say computer or ship. The contract states that certain equipment out of the variable items will be supplied by the XYZ Limited at a free of cost. That the customer only will give some materials to me, which I need to install it on the board of the ship. Like webcam, customer only, I am the manufacturer of this computer, but customer says, look sir, when you give me this computer, you integrate this webcam. I don't want any webcam, I only come and give it to you, you integrate this only, for some XYZ reason. Now some equipments are procured by defense innovators in the presence of XYZ Private Limited representative for technical scrutiny as well as negotiating prices, because they will pay you cost plus margin. The vendor of this equipment are paid by the defense. The cost of the equipment along with the installation cost is claimed and reimbursed by the XYZ company, their customer. There are certain other equipment, okay, which are ordered directly placed by the XYZ, and these equipments are known as BFE, buyer furnished equipment. This one, certain equipments, this is the name of this equipment is called BFE. They are delivered to the company free of cost. The labor and cost of installation is already included in the price component of the contract. When we discussed the fixed price, no, that includes this installation. BFEs are returned to the buyer along with the completion of the ship. Take this ship, in that your BFE is already installed. Now the period required for the construction is 4 years. And I say, for example, I am in the second year. Already my customer has given BFE to me. It is lying with me end of the year. Whether the cost of BFE supplied by the XYZ Limited to defense for installing can be considered as an inventory by the defense, and on delivery, can you recognize it as a revenue? Is it inventory? Is it part of my work in progress? Can I recognize revenue on this value? Is it my revenue recognition to the extent of cost incurred? Did you incur the cost? Who paid here? BFE. Where? They said buyer will incur. No, your normal B and D you are incurring. BFE, customer is incurring. If when you didn't pay, how can you claim a revenue on that? That is this portion. They didn't ask you. They asked you BFE portion only, no? Because for B and D, there is no confusion at all. The confusion is only when regard to this BFE portion. Since BFE is lying with me, at the end of, is it my stock? That's the first question. Second, when I load it and give to the customer, should I recognize revenue on that portion? Nice question, right? Appreciate the question. Which one? Basic story, some big story is given. Leave it. The question here is that this is the crux. Which one? What does that revenue include? Revenue includes the BFE or cost of installation of the BFE. That's what they are asking. That's what, no, revenue doesn't consider, and they consider only the installation cost of the BFE. Installation is already included in the price. Only installation part is part of the BFE. So the answer, final answer is, this is neither inventory, this is neither revenue. You are holding it like a bail. We discussed, no, I told you in yesterday while. Yeah, you are holding. Yeah, that's it. Can it become your inventory? How you can recognize revenue on this? You cannot show, okay, are you a principal here? How? No, see, again, who is the primary party to the contract? Here, the XYZ directly places the order to the customer. You only get the delivery to install it. In that case, elevator, I place the order. In this case, defense innovator would have placed the order, would have got it and handed over to you. Then yes, you would have treated it as a principal. And on that lift, where? Tailor shop. Yeah, material. Whose material it is? Best thing example is a tailor. Very nice. Think like this. A simple day-to-day our here and there example. You go to a tailor shop, you see so many pants are there. Is it his inventory there? He has so many shirt and salwar, this thing, dress and all he has stitched. Is it his inventory? Will he show in the balance sheet? No. Because I gave the material and he did the modification, I will pay the charges. So at the end of the day, he doesn't have any inventory with him. Followed, no? He is holding as a bailey. Tomorrow if something goes wrong, he has to replace me that material. He has to reimburse me the cost of the material. That is full. The doubt is not regarding the plant number 1. The doubt is regarding only BFE, not B and D. This is B and D. B and D genuine. Now, I'll ask you one more thing. Yeah, tailor example only. Very nice example. You have got buttons. And at the end of the day, you have got so many buttons with you. Is that button in your inventory? Will you recognize revenue on the button? Exactly. Will you recognize revenue on the cloth? No, exactly, no. Clear? Yeah, and please think very simple, because if you started to think in a very simple language, it is a sign that you have understood it. Who is telling? Albert Einstein is telling. I am not telling. That means you are getting connected with it. Just think in around you, you see so many examples are there. The principle which happens at the tailor level is the same principle which is happening with a very complex, very tricky this level. Only it's given a big picture there. But if you look at the underlying principle, it's a simple principle. Followed, no? Yes. So the answer is this. So to XFA. Now this is fine, understood. The practice is required now. How do you tell to the evaluator? What is the question? Whether cost. Have they elaborate? What do you mean by elaborate? I also sometimes just forget. See, elaborate means develop or present a theory with further details, or many carefully arranged parts or details, that is elaborate. So this has got so many parts. First of all, you are supposed to tell whether it is an inventory or not. You have to speak about the revenue recognition, then you have to tell. So first you say whether it is an inventory. So inventory is possible only when it is an asset. What do you mean by an asset? Asset is something which is your resources controlled for future economic benefit. Now when the customer gives you the dress material, do you have control over it? No, you have to return it back to him. Can you stitch this and give to somebody else? No. But if you would have procured it, you could have interchanged. That means you could have given to anyone. So tomorrow another person comes with the double the price. I can just move this and get better economic benefits. But when the BFEs were there, that advantage I don't have. I have to just use it. So economic resource is the right to get the future economic benefits. In the given case, the orders which you directly place, yes, they are interchangeable. You could have done that. You pay the installation charges for the BFEs. Company can neither incur any cost nor amount is recoverable on account except the installation charges. So first of all, they are not your assets only. In fact, after installation, BFEs are returned to the buyer. Then you are holding only as a capacity of a Bailey. So since it is not an asset, it is neither inventory nor it is work in progress. And coming to the revenue recognition, it should not be considered as a part of the revenue because you have not received any consideration towards the sale of that. No. First of all, contract 1 only says that one of the conditions you should have got money. You got what is your revenue? Installation charges is your revenue. That you claim. But for this, you cannot say no as a revenue. Yeah. Nice question. Again, you can give low priority as of now because it's a part of MTP till now. So with this, we are done with the chapter called inventory valuation. See quickly, small chapter.